Hey party animals, welcome to the tax panel. Thanks for coming. The topic's the future of taxation in the evolving crypto landscape. My name's Tim Edwards, I'm the head of digital assets at HopgoodGanim. Now, I got a litigation background. I don't specialize in tax advisory. So I think the idea is I use that as a platform to ask the really dumb or annoying or ignorant questions so you don't have to. So if you hear me ask a dumb question, that's why I did it, or I was making a joke. And we really want it to be, yeah, see, I got a laugh already, look at that. You get the easy questions. Harry's getting stitched up. Everything Harry says is binding legal advice you can rely upon. But we're going to try to make it interactive. We're going to try to take some questions from the audience. There are ATO officers at the exits. But I might let everyone introduce themselves first and give a little bit of a sales pitch. Use the ad time. Start off, Maryna.
Hi guys, my name is Maryna and I'm tax co-founder of Syla. It's software for crypto tax. So we are Australia-specific software where we help you to save on tax. It's our main goal and mission, where we apply lowest tax first out. That means you can actually save on tax, where the software goes through all the parcels of your Bitcoin or whatever asset you invest into and calculates what would make the lowest tax result for you. Really excited to be here.
Excellent. My name's Dell. I'm the founder of Cadena Legal and managing director still. They haven't got rid of me. Maybe they never will. Tax specialist, started at the ATO many, many years ago, working in crypto assets in advice areas, and I've been running private practice in Sydney and Brisbane for the last few years. We're specialists in both domestic taxation, international tax, disputes, really, really weird and fun stuff. So you either really don't want to talk to me because you're in a very bad spot, or you've made way too much money and we've got to do some stuff. So it's fun what we do, and I get to work with everybody here on this panel as well, which is great.
Hi, my name is Natalia Clack, and I'm founder and director of Easy Super. We specialize in a self-managed superannuation funds, and we do everything SMSFs. I've been doing SMSFs for 22 years, and 7 years ago, we started getting a lot of clients with cryptocurrency. We deal with any complexity, any complex superannuation funds, with complex crypto issues. We deal with ATO a lot, and like I said, cryptocurrency is one of our specialties in a self-managed superannuation fund. So, but we do all other assets in SMSFs as well.
GM everyone, I'm Matt, manager at TaxOnChain. We are a tax agent and accounting firm. We're not your tax agent and accounting firm yet, but we could be. We do everything a traditional accountant or tax agent would do: tax returns, financial statements, across any structure, individuals, SMSFs, companies and trusts. We help to structure people up as well. We can do all of that. We love the crypto space more. That is our passion. We're deep in the weeds like most of you guys as well, and that's what we like to do. So we want to help people make their crypto tax activity something that is compliant, something they can fit into their tax return and keep the ATO monkey off their back.
Thanks, guys. Harry, what's your TikTok handle?
Harry Dell Tax Talk, please follow me. I almost never post, but I used to. And if you pressure me, I will do it again.
I did not expect a plug there. I expected like a polite, I'll stop it, but anyway. All right, so I'm going to try to start us off with the drier stuff around law, what's changing, how does it even apply to crypto. Then we're going to move on to some more practical tips and things these experts are seeing. So the driest question I could come up with that I understood: there's a lot of buzz in the crypto space and in the Australian legal landscape about new laws coming out, or at least being talked about and considered. It's slow, but being considered in the financial services space. I don't really hear about that for tax. Is that because I'm not paying attention, because it's boring, or is it because there's way less reform going on? Who wants it? Harry wants it. Yeah. Rant time.
Yeah, I feel pretty left out because the financial services lawyers get all this cool new licensing stuff, and is it a security? There's currently no tax legislation planned for crypto tax. There's no further guidance planned, as far as I'm aware. If someone has any other information, let me know. But there's nothing published that they're doing anything. There's no further web guidance planned. The web guidance we've got already sucks. The only legal change that I have seen related to this is the crypto asset reporting framework. And this is an interactive part. Do people know what the CRS is? People heard of that? Yeah. I had one guy nod. He's a lawyer, he doesn't count. The CRS is where they report international bank accounts cross-border to your home country to prevent tax evasion. The crypto asset reporting framework is starting in 2026, I believe, and they've got a consultation on implementing that, which is about reporting accounts that hold crypto or crypto exchanges will be reported to your home country. So if you're an Australian citizen and you open one up in Lithuania, they'll report it to Australia under the crypto asset reporting framework. That's the basics of it. That's the only change I can think of. Please, someone tell me I'm wrong.
I think Harrison has written on many an occasion that the guidance that's coming out from the ATO is non-binding and it might as well be toilet paper.
And there was a case said that the other day. Someone tried to rely on the web guidance and they said, no, that's silly. So it's been confirmed.
Yeah, it's good. Good times. And I mean, a lot of us on this panel as well have been part of tax working groups. We've worked with the blockchain industry peak body, Blockchain Australia, or now DECA. They had a seat at the table. The ATO were present, but I think the lights were on and no one was home. There's not a whole lot of responses coming from the ATO. They're not keen on working with industry to provide any sound guidance for us. So we do continue to live in this world of either regulatory uncertainty or regulatory arbitrage, depending on which way you look at it.
So they're not bothering to do a ton of new guidance. The new guidance isn't binding. There's not a ton of new law. That means they're chill, right? Like they're not too worried about it. Enforcement's not. No, Harry's, you're nodding. Harry's nodding. They're chill. ATO's chill.
ATO is not chill. ATO a bit bored of crypto, but they'll be back to it, especially with this bull market. But I remember Maryna at one of the working groups. It was about like clarity of when CGT's triggered and things were done about that in terms of trying to make those submissions, but nothing really eventuated because government is disinterested, I think.
Yeah, the government doesn't have appetite to make changes, and changes in Australia takes years. So to change tax law takes absolutely years. We only seen once for COVID, the changes were pushed overnight, and there was a good reason. So they had the good reason. With crypto assets, Australian government doesn't have appetite yet. I think they're watching what's going on in the US, and that's going to be our copy-paste influence because, yeah, we don't want to be behind, but we are behind. And I think that the US market will be dictating how quickly Australian politicians will be interested to make a change here. And as you know, to change a law requires lobbying and politicians to be involved, unfortunately, and that takes years. So with the ATO, we've seen that they do audits, but it's not like systematic. So it's more, they would be interested to know that you are declaring. So if you are making large gains and not declaring, they will find you and they will be absolutely interested to clarify that with you. However, we don't see many audits or number of reviews specifically for cryptocurrency.
That's very cheery. That's good to hear.
Sorry.
I knew what I was doing. So what are the biggest areas of uncertainty and in the tax law? Like what's still not clear because it hasn't changed in forever? And be careful because I'm going to ask you what you think the answer is. And if I don't, I'm sure people here will, especially when you say things like staking and yield and wrapping and CGT and all that stuff. So what are we, maybe starting from the end, starting from Matt, I'll stitch you up. What's still not clear?
I guess the biggest thing is most prevalent in smart contract platforms like Ethereum, Solana. a lot of these layer 2 blockchains, the movement of assets between blockchains, what we know as bridging, a lot of people will think, yeah, that's just moving one asset from one place to another, kind of like moving a house from one block of dirt to another. That's not a CGT event, but the tax office in its current understanding of the rules thinks that assets moving from one blockchain to another is a CGT event. Same again for wrapping and unwrapping native tokens so that they can be used within smart contract interactions. Taxman thinks that's a taxable event as well. Yeah, there's a fair few of those. The thing I found most interesting recently in the SMSF space is Section 67 of the SIS Act prohibits trustees from borrowing money in their SMSFs. Hint, money, not crypto assets. The tax office has specifically said that crypto is not currency, it is a CGT asset, so there are loopholes starting to form in the legislation that aren't being picked up by the tax office, and I think that means, again, is it uncertainty, is it arbitrage, are people going to make a move on this kind of thing and exploit it? There's opportunities out there, well, I say opportunities, but yeah, there's opportunities there to exploit uncertainty, and I think one of Harrison's associates at Cadena, Damien, he's actually trying to pose the question of whether Bitcoin is actually property. If it's declared not property, then really it shouldn't be getting taxed. That could be something to tee over to you.
That one's at the tribunal stage. So I'm gonna summarise at very high level because Damien should have been here to explain it. It's very interesting.
Where is he?
He's back home doing work. Someone's got to do some work in the firm. I get to come here. But if Bitcoin is not legal property, which has been accepted by some jurisdictions and not accepted in others, then it can't be touched by CGT because only property can be taxed, legal property. It's quite a low threshold, but Bitcoin is unique in how it's really just data and the right to use a network and not enforced. So I'll leave it at that. But there's a lot of SIS Act problems. And I know you've been dealing with those as well, both of you actually.
Look, I wouldn't start exploring the loopholes in SIS legislation, especially with Section 67, because you definitely will get in trouble with ATO, because in the SMSF space, SMSF is very regulated entities, and you put complexity of SMSFs on top of SIS regulations. And crypto complexity, and you get, like the very, very regulated entities. And in SMSF, the ATO position that you have to basically abide the section, the SOL test in SMSF. It means that your superannuation is to provide the benefits for you in retirement. And you have to start, when you invest your superannuation, you have to start with that question. Is this investment going to benefit me in my retirement, or this is too risky, or I'm trying to play with the law? So if you want to challenge the law, yes, you can do it, but again, in this country there are not a lot of crypto lawyers, and there are not a lot of crypto specialists in terms of the ATO officers and ATO compliance staff as well. We deal with ATO all the time, and to be honest, very often they ask me for my opinion of what should be happening in that or in our particular case. So it means that I would suggest that if you have self-managed superannuation fund, try to stay safe, try to, just keep it simple, and again, so the more simple you have, the investment strategy you have in the SMSF, the easier you pass the compliance, you pass the audit in the SMSF. So, but if you want to play with the fire and exploit, he is a lawyer, so
He's the one with loopholes.
Yeah, so
just
he knows
find them,
the
I don't exploit
loophole. This is your lawyer, but I wouldn't advise you to exploit these loopholes because I know Section 67 very well. You will not succeed, I promise you.
SMSFs, there are criminal offences for dealing with your SMSF incorrectly. It's not something where you push the boundaries. Merlo was...
You can go to jail? What?
You can go to jail, you can.
You've
He told me
stolen
that
my
over
next
lunch.
joke, damn it. My fourth
See you in
question was
jail.
just SMSF ? Jail,
Yes.
exclamation mark.
Yes?
There are,
Question
but
mark.
so it's criminal offences that can lead to sentencing if you mess with an
It
SMSF.
can be. I don't think there's been many prosecutions ever happen.
No, I have not met anyone who went to jail,
None that I'm aware
but
of.
I've met quite a few people who were penalized and disqualified from being a trustee of SMSF. They cannot be directors of the trustee company. And also the penalties, you know, like the breach is 60 penalty units, what is like now, 331 something. So every breach you pay 20 grand. So, and yeah, the breaches, they multiply and you basically end up with hundreds of thousands in penalties. So you don't want to play with the fire, like I said. So.
It is actually legislated in, I think it was section 66. So where you can potentially go to jail is if you transfer crypto from your personal account into an SMSF account, whether that's an exchange or a wallet. You can't do that. You have to sell to Australian dollars, contribute to your super fund, then buy the asset. If you don't and you skip those steps, you are in breach of that particular section of the Superannuation Industry Supervision Act, and the penalty is up to 12 months imprisonment. Now, you might have done that once and that might be okay. Maybe 1 year is okay, but look, we've had some people previously that have done it. No, he's not here. I can't.
They didn't go to jail.
I won't dox him, but he did it about 119 times in a single year, just systematically transferring assets into his SMSF exchange account, liquidating, drawing it as a pension. I'm yet to tell him the bad news, so you guys heard it here first. He's probably going to jail.
I've been meaning to talk to your client and I only told like 250 people first. Fantastic.
Absolutely.
So they force you to sell and buy at each end of the transaction, and they're all CGT events too that you have to do to move it.
Yeah, in your personal name, yes, that's right.
Sweet. Okay.
Yeah.
Got it.
So you're getting hit at every angle.
I got a few more questions down that track, but I might break it up. Anyone brave enough to ask a question from the audience? Now, before you do, and I've seen the hands, so you can't take them away now. The way I suggest you ask these questions, I'm stealing this from Harry. I had a dream, and in that dream, the person did this. That's how you should ask it. It's never about you. All right, so would you like to go first with the
Take a
question?
mic with
Do we
you,
have
Tim.
a mic? I didn't plan that.
There's a spare mic there.
Is the guy helping us with sound about to murder me?
Yeah, it should be on already.
I think it's on.
It's all right.
When we bring money in from our SMSF account into Binance, or even to Kraken, if it's in AUD and we convert it into USDT, is that a CGT event?
Not from Australian dollars into a crypto asset, including stable coins. Going back the other way, yes. Going from a stable coin back to Australian dollars, or just selling any stable coin generally, you will trigger a CGT event, but the amount of gain or loss you're going to have is so minimal that it's unlikely you're going to have a massive tax impact.
Okay. So second question, if I may. Yeah. You talked about the personal account. We're not allowed to use personal account for SMSF, fair enough. But No, it's a complete no, I get that. But then if you buy coins via Uniswap or even using a MetaMask and connecting it somewhere, you don't have evidence that it's SMSF, but you're using SMSF funds, though you've got the root of money showing that way. Is that against ATO rules or no?
So that's actually a good point, and there's not a lot of clarity on this either. But basically, for a lot of the clients that we set SMSFs up for, they might want to do those kind of things. They may want to move their assets on-chain. They may want to interact with DeFi protocols like Uniswap, 1inch, shout out to 1inch over there. They will trigger CGT events and they can trade in an SMSF. What you have to do, though, is declare a specific wallet as a wallet that belongs to the SMSF. You have to keep assets that you own personally separate to that SMSF wallet, and the co-mingling of those assets, if that ever happens, that can be a breach of superannuation law and regulations. So yeah, as long as you keep everything separate, as long as you're not dealing in leverage is a big no-no as well, then yeah, you can absolutely interact on chain with an SMSF. The biggest thing is keeping things clean, keeping things separate, but absolutely you could do that if you wanted to.
I might get one more question from over here before I rip that spotlight back.
Thanks, everyone. It's a great discussion. I'm just interested to know if in the crypto space, similar to banks and stockbroking firms, if in fact you now have to disclose whatever interest or dividends to the tax office in any space within crypto, because it surprises me that they don't have some of this data or haven't started levering companies to supply it.
I think that's a good opportunity to pass it over to Maryna, because that's something that they have to deal with quite frequently at Syla, because there are different ways that things happen in the background at a smart contract level. So yeah, it depends on what platform you're interacting with. It does end up with different tax consequences as a result. But yeah, I'll pass over to you, Maryna, to talk about that. How we have to deal with certain activity for people investing and receiving yield from passive investments, including interest on things like, I'm imagining something like Celsius from back in the day, like where you receive income on a frequent or semi-frequent basis. But I know a lot of the time it depends. If it was a centralized platform like that, you might receive income daily distributed and credited as if it was interest in a bank account, but you may have assets sitting in a protocol like Aave, completely different situation like that. So yeah, it does come down to what is happening and how you need to reconcile that. Yeah, they are asking for that information as well. Yeah. And using a software like Syla you'd be able to summarize all that activity and put it into a format that the ATO can read.
Yeah, in Syla we have special accounts for self-managed super funds, which is great because you're meant to actually keep everything separate, including any investments in crypto meant to be separate from your individual investments, as we discussed, can lead even to jail. Not in practice really, but you don't want penalties, so that's obviously on a separate account. And in Syla, we have a special page, like balances, where you can actually monitor where your funds are, in which location, at which data source, in quantities. And I think for audit, what's most important is data source. So auditors go with like data source. They will be requesting all information from each platform. So you're meant to have statements, and you do meant to have something to verify what are your balances on each platform. And the statement sometimes is not the only thing that auditors want, to make sure that they can sign up, sign on your report to say that everything is fine. So some of them will qualify Part A because they don't want to do additional tests. Additional tests means they have to spend more time, so it's more like time cost. And some auditors are willing to do the additional tests, and they will say, okay, this is fine. We're not going to qualify anything here because we can do the test and we can confirm the balances, and they can trust those statements. And some auditors would say, I do want to see that the statements were audited. And as we know, not many platforms have gone through the audit, but that may change as well in the future.
Yeah, I want to add about SMSF auditors, because I'm a SMSF auditor as well. And the auditors would, most auditors will qualify the Part A of audit report if you hold your crypto, like in the custodian. So because the custodian say the exchange, they have to have type 2 audit report, which type 2 audit report is about what processes they have in place, like to make sure the data is correct and the report is calculated correctly. So most of exchanges would not have this type 2 report, and because of custodian, recent regulation from ATO, most of auditors will qualify the Part A of audit report, because if you hold it in a custodian, again, they have to be confident that these assets, they belong to the super fund and they exist. So therefore, like Maryna said, most auditors will actually ask you for the address for your crypto, and they'll go online and check that this crypto exists. And they can check the transactions. They'll ask you for transaction ID. They'll ask you for your, like wallet's address, for example, and they'll go and check themselves. So you have to be prepared to provide this information for the auditors as well.
No offense to SMSF auditors, though, but do they actually check that?
Yes, we do check it. I do check it as an auditor, and the auditors should check it because they should do testing. And the testing includes, like you have to verify yourself that this, like asset exists. So they can't trust just the report from, even like from CoinSpot or anywhere else, because again, it's a custodian. And new guidance from ATO that we can't rely on the custodian report. We have to qualify Part A, or we have to go and check it them ourselves as a SMSF auditor.
I will give a shout out though to CoinStash, because you are right. There can't be any assurances given to reports that come from crypto exchanges. We saw what happened with FTX. Everyone thought that the assets were there. They weren't. Exchange blew up. But shout out to CoinStash. They do have an external SMSF, or they do have an audit report that allows people to rely on the reports that they churn out. So it does mean that SMSF auditors will now be able to sign off unqualified on their Part A of the audit report. So I hope more crypto exchanges follow suit and do something similar, because that will mean that people can comfortably leave assets on an exchange if they choose to. As a lot of people would know, not your keys, not your crypto, but if you've got it on a platform that is doing the right thing and custodying your assets properly, then yeah, you're at a much lower risk compared to other players in the space.
Yeah, but you shouldn't be worrying about qualification, especially Part A qualification, as long as the auditor doesn't report you to ATO, and they don't have to lodge there are criteria when they lodge the ACR, auditor contravention report. As long as they don't lodge it, like you shouldn't be too worried about Part A. I've never seen ATO came back to us and audit any SMSF with Part A contravention. So it's just the part of the auditor's job, and the auditors, they have to protect themselves as well. So, yeah.
That explains why Matt's wearing so much CoinStash merch as well. It's all coming together now. Before we take it, you're too far away for me to hear what you're saying. Sorry, man.
I'm dripping. Drip check.
Dripping. Before we go to a few more audience questions, I'm dying to ask, and I might hit each of you with this, but I'm going to start with Harry. If you were dying to scream a small bit of advice at everyone in this room to stop making a certain mistake or start doing something that you just see all the time and it blows your mind, what would it be?
Why don't I tell a story?
Go on.
Just ignore the whole question. No, it's on track. Especially in DeFi summer, which was quite a while ago now, yield was very sexy. There were projects like strong nodes. There were all sorts of things that were making crazy amounts of yield. And the caution I have for people is this fellow had like hundreds of thousands of dollars invested in strong nodes. He was making millions of dollars, and he thought this thing will last forever. no Ponzi scheme lasts forever, unfortunately. And he had all this income coming in, millions and millions of dollars, had to pay tax on that, and then he lost all that capital. And when he loses it, you'd think, well, that'll reduce the income. Does not. Capital loss you can't offset against your income. And this is a major disparity in the Australian tax system, because capital gains you can offset against revenue losses, income losses, but income gains you can't use capital losses. They can only be applied against capital gains. And this fellow actually went bankrupt. He didn't have a choice. The ATO debt was crippling. It was over $1 million. It was more than his whole portfolio, more than the entire value of his house. ATO was entirely unsympathetic. And look, they don't make the law. They just enforce the law. It's government's job, Parliament's job to make the law. And I do hope that those sorts of major issues are going to be fixed, because I see a lot of people and they go, I haven't made a profit this year in crypto. I've lost money. But they do their tax report and they've got tax to pay. You'd see that all the time. People making staking income, yielding income, airdrops, depending what they are. The tax report can differ from reality. And that's a big problem if you don't stay on top of it. So by doing your tax reporting not once a year and you sit down and you spend a day or two doing it, or even longer, if you're an active trader, active investor, just get on the platform that you're using, whether it's Syla or CTC or whatever, and just update it every week. Make sure you reconcile the transactions. Because, mate, I don't know what I did last week, let alone what last year I did on some random wallet I forgot about. So it's just staying on top of the compliance and knowing what your tax liability is going to be so that you're not surprised by it. It's the same advice we give business owners who go insolvent because they make 100 grand, they spend it all, then the tax bill comes in and they get knocked out. It's just, you've got to plan for it. Unfortunately, you can only plan in advance, not once you've already done everything.
That was nice. Anyone else have a story? That makes my job real easy.
Story time's good.
I have a story about someone who was receiving staking rewards for and airdrops for some like really small coin, but they were receiving it for 3 months only in the SMSF and didn't check that at the time when they were receiving the staking rewards, the market value of this coin was really high, and it's only 3 months in the history of this coin the market value was so high. So they ended up with making, on paper, they came to me 3 years after because they couldn't find the accountant who is SMSF specialist as well. And they came to me three years after, and the bill was like, it was $1 million, over the $1 million in profit. They sold this coin 2 years later, I think, for $10,000. So on paper, they made over the $1 million in staking, because when they're receiving, how staking rewards work, when you receive a coin, on that day, this is the market value of the coin goes into your income statement. So basically, this is your ordinary income, which you have to pay tax on it. So he ended up with like really very high tax bill. Even in SMSF, you pay only 15% tax on ordinary income. It's still a lot of money when in reality, they didn't make that money. So we had to actually argue with ATO and work with specialists in the industry to make sure that we reduce this tax bill for this client. So, but yeah, it's very unfair how staking rewards could be taxed. And this guy, like this trustee, they didn't have any idea they made so much money because they didn't look even at this coin at the time. So they were getting these rewards. So you have to be really careful and watch what you are getting and how much tax you'll be paying.
I'll build on what Harry said. You need to be on top of your records. You need to find a good tax accountant that will help you to plan ahead. The world is our oyster when it's before 30 June, but afterwards we're very limited in what we can do for you to optimize for your tax position. So make sure you're on top of what your activity has been for the year. Come and talk to us if you think you've paid a lot of tax and you want to try and optimize or minimize your tax. We have potential options to minimize your tax, whether that's by, and I'll give myself an unpaid shill here. I've got a a presentation over at the Nexter Theatre tomorrow, 1:20, tax structures, strategies, and SMSFs. Come have a look. I'll be talking about that in more detail there.
Shameless self-shill there.
That was a shameless self-shill.
I will be there.
Thank you. You have to come.
Damn it.
But these kind of things, being proactive with your tax, are the things that are going to save you the most. Coming to us and asking us to save you tax after the financial year's finished, good luck.
I think maybe we have time for 3 questions. So, yeah, you were very enthusiastic.
The man in the sunglasses.
There we go. Over
I want to
here.
hear what his question
Sorry.
is.
Then you're number 2. And then we'll go lightning round for number 3 because I didn't see anything. You are waving. That's pretty hard to ignore. All right, you're number 3.
Can you give us your thoughts on the 122A rollover in regards to people making short-term gains in crypto this bull run? And my second question is, what advice would you give your 18-year-old self if you were in crypto tax-wise?
What was the first question again? So
What are your thoughts on the 122A rollover in terms of crypto, in terms of making short-term gains?
Are you targeting me?
Yeah.
Okay. So 122A rollover is, so like, as advisors, we do a lot of restructuring for people, especially traders. And 122A rollover allows from you to move from an individual or a trust ownership of an asset into a company structure. The main reason that we've been doing it recently is because of pump.fund style tokens, where people are making crap loads of money on token names that I could certainly not pronounce, I should not say in public, and they're making hundreds of thousands of dollars every month in realised or often unrealised gains, where they'll hold it for quite a period. So we'll use that rollover to move them into a corporate structure before they sell. Because when you sell, there's that trigger event. In a company, you'll pay either 25 or 30%, depending on whether you're carrying on a business or not, and much better than 47%, which is the alternative. So that restructure, and often we need to do it very quickly, can get an immediate tax saving, let you have more capital to keep trading, because people who are doing short-term tradings like that generally want to do it again. So they may as well get a tax saving while they do it. If they are at the level of carrying on a business, which I would caution you from just saying, I'm carrying on a business, because I trade a lot. It's a bit more complicated than that. You can use another rollover called 328G. And 328G is handy because you can throw it into a trust. And trusts are like God for tax planning, because you can decide later about, we're sending the income to this person or that person or that person, or I can incorporate a company and send it there. So those rollovers are some of the 2 main tools that we use for Australian residents to restructure them to give them the most effective tax possible. But it needs to be in real time. You can't come to us, as Merlo said, end of the year and say, hey, I made $1 million trading, what do I do now? Because I'll just say, pay the tax, you silly sausage, and then send you a bill.
Do you know any good law firms that could help with that kind of thing while we move to question number 2?
I don't know any good lawyers at all.
Well, that's hurtful. All right, question number 2. Cadena Legal.
Hi, thank you. Just an audit question. I have self-custody and I sign a letter of acknowledgement to prove the amount, well not prove, but tell the auditors what I'm...
It's a bit louder. I can't
Sorry,
quite hear you.
how's that?
That's much
Yeah.
very good.
Okay, thank you. Self-custody, so I have to sign a letter of acknowledgement to my auditor, just to say how much I've got, and they take that as proof. I just want your opinion on what you think about that. And the second question is, they also ask for my public key, which I don't give them because I've always understood that was like a security issue, just sending it to them in an email.
Was that public key or private key?
Public.
They want your public key?
Yeah,
Okay.
so they can look up on the ledger, up on the blockchain and validate the amount that's in the letter of acknowledgement.
This is a question for you.
To be honest, with acknowledgement, it's worth not a lot from the auditor's perspective. So, and in terms of, if the auditor will not get the evidence and can't check your transactions, can't check the existence of the assets, they have to qualify the audit report. Again, it's not the end of the day, right? So it means, yes, they can lodge the auditor contravention report, but it doesn't mean that ATO will come and audit you at all. So, because there are a lot of auditors lodging the contravention reports with crypto, and I have not seen a lot back from the ATO. So you have to be that scared. Don't be that scared of the auditor's contravention report. However, if the amount of contravention is really high, this is where there is a higher chance that, yeah, ATO will come and audit you, because they look at as a, like, their resources are limited. So they only will audit you if there is something to audit there, if they know they can get, you know, like, high tax bill from you. If it's just few hundred or few $1,000s, trust me, they will not, you know, dedicate any resources to audit your SMSF. So it's up to you. You don't have to provide it to the auditor, but again, just expect the auditor's contravention report and deal with the consequences. That's it.
Thank you. All righty, last question. We got a giant clock saying 2 minutes 26. No pressure.
Hi there. Look, I've always been curious as to how keen the ATO might be to pursue you if you have failed to declare or underreported a capital gains event or liability, given that every trade you make on an Australian exchange is supposedly reported to the ATO. In other words, does the ATO check against what their records are as to what you've reported?
I can't attest to how good the ATO is at cross-checking these kind of records. Their capability, I think, as Harrison and I have spoken at large length on many occasions about, they don't seem to have the resources, they don't seem to have the skill set at the moment to be able to cross-check these things. So they're going after the low-hanging fruit. If you're not reporting anything at all and they can see activities happened, they will go after that. Outside of that, we are very much flying by the seat of our pants, where we're operating in an honesty-based system. If you're coming through a registered tax agent, such as ourselves, we will be required to make sure that you're recording the most accurate version of your activity that you give us. So by doing that, you start the clock on any amendment window that might be available. 2 years for individuals, 5, I believe, for SMSFs and organisations. Correct me if I'm wrong, Harrison. But yeah, you're very much relying on an honesty-based system. But you also want to start that clock running, because once it stops, no one can make changes to your tax return. But on the flip side, if Taxman suddenly finds these capabilities to cross-check records and they realise 5 years ago plus that you did the wrong thing deliberately, they can prove that you were fraudulent or you were very reckless in not reporting or very grossly over or under reporting your crypto activity, they have unlimited scope. They can go back as far as they want. So we're incentivized to make sure that you do the right thing, not just because it's the right thing to do, but also to make sure that if we're living in a world of regulatory uncertainty for tax, that we're closing that gap off and we don't have to keep sleeping at night restlessly, thinking the ATO might come after us and knock down the door.
And remember that Australia is very good at retrospective punishment. So always remember that they can go back, 3, 4, 5 years. Sorry.
I'll add something, and this didn't used to be such an important distinction, but if you go to a tax agent and they're aware that you're under reporting, under the new Taxation Services Act determinations, there are requirements to dob you in very limited circumstances, but there's much more the honesty requirement that Merle was talking about. Now, as a lawyer, I have no obligation to disclose to anybody. You can tell me you murdered someone and come in. Legal privilege is sacred still in this country. So if you've got an under-reporting problem, even over many years, potential to be for the ATO to determine that fraud or evasion has occurred, which isn't very good. You don't want that. But there's also limits on what the ATO can do. There's things like voluntary disclosures. So you actually need to be, only in the past 6 months, you now have to actually be very careful about which professional you go to first. Because if you come to me and say, I've underreported $20 million of capital gains and lodged nothing, then I can advise you freely, openly, because that's how that system is designed. But as tax agents, it puts a pressure on them, and if you've done something like that, come to the lawyer first and then the accountant, okay? Because the accountant can go off my advice and say, we need to do voluntary disclosures for these years and not for those years. But the accountant is in a hard spot, so that's kind of when you need tax lawyers, when it's nasty like that.
I'll close out with, if you use Tornado Cash, go see Harrison as well before you come see us.
Yes, thank you for slipping that in.
In fact, put that Tornado Cash ETH in my wallet.
Oh, look at that, the time's up. All right.
Oh no.
Thank you, everyone. Thank you, experts. They'll all be around. I also MC weddings.
Thank you.
Thank you, guys.
Thanks.